On the heels of a controversial downgrade by Fitch, the African Union is shaking up the global financial system with the launch of AfCRA, the African Credit Rating Agency. This bold move promises to reshape how Africa's economies are assessed, offering a fresh, continent-led perspective on creditworthiness. But to understand why AfCRA is so crucial for Africa's future, we need to go back to a moment when the continent's financial future was dictated by the big three Western rating agencies. How did Africa come to realize it needed its own voice in global credit assessments? And what does this mean for the future of African economies? Stay tuned to find out. For years, Africa has relied on the big three Western credit rating agencies, Fitch, Moody's, and S&P, to assess its economic stability and creditworthiness. These agencies have long held a dominant position in global finance, determining the borrowing costs for African governments and institutions. However, this dependence on external agencies, often disconnected from the continent's unique economic realities, has raised growing concerns. Lower credit ratings frequently lead to higher borrowing costs, limiting fiscal space for critical investments in infrastructure, healthcare, and development. In response to these concerns, the African Union has announced the establishment of the African Credit Rating Agency, AfCRA, set to launch by September 2025. AfCRA is designed to offer a more localized, Africa-focused approach to credit assessments, integrating the continent's specific economic conditions and policy context into its evaluations. The decision to create AfCRA was driven by the growing dissatisfaction with Western rating agencies, particularly following Fitch's controversial downgrade of the African Export-Import Bank, Afreximbank, to BBB. This downgrade sparked a heated debate among African policymakers and financial experts, raising questions about the fairness and relevance of external credit assessments. It became clear that African economies required a more regionally grounded perspective. In response to this call for change, the African Union launched AfCRA, with the goal of providing an Africa-led alternative to the traditional rating models. The aim was to offer a more accurate and contextual understanding of Africa's creditworthiness, reflecting the continent's growth potential and unique challenges. AfCRA's development gained significant momentum as it emphasized its independence from political influence. The agency will be owned by African private sector entities, ensuring that its ratings remain objective and free from governmental control. This structure aims to enhance AfCRA's credibility and independence, making it a trusted authority in African financial markets. The agency will focus not only on sovereign debt ratings, but also on local currency debt, an area often overlooked by Western agencies. Local currency debt is critical for strengthening domestic capital markets and reducing exposure to foreign exchange risks, which have long been a challenge for African countries. By incorporating these factors into its assessments, AfCRA seeks to provide a more accurate reflection of Africa's economic realities. As AfCRA's plans progressed, it became clear that the agency would offer African nations a vital tool in navigating the global financial system. By providing an African-led perspective, AfCRA would allow the continent to take greater control over its financial future. The launch of AfCRA marks a significant milestone in Africa's financial evolution. The agency will offer African nations the opportunity to secure fairer borrowing terms, based on a more nuanced and contextual understanding of their economies. AfCRA aims to establish itself as a key player in the global credit rating space, influencing the way African countries engage with international financial markets. With its focus on local economic conditions and policy contexts, AfCRA will help reshape the narrative around Africa's financial prospects. No longer subject to the limitations of external assessments, African nations will be empowered to negotiate better terms for their debt, fostering greater economic stability and growth. AfCRA's influence will continue to grow as it increasingly shapes the global conversation about credit ratings. By offering an African-led perspective, the agency has gained recognition not only within the continent, but also from international financial institutions. This shift marks a significant change in how African economies are perceived and assessed globally. AfCRA will be a critical tool in reshaping Africa's financial landscape, positioning the continent as a stronger player in global markets. AfCRA stands as a symbol of Africa's growing economic autonomy. The agency aims to successfully provide African nations with the opportunity to assert greater control over their financial futures, ensuring that their unique economic conditions are better represented in global credit assessments. As AfCRA continues to expand its influence, it offers a powerful model for other regions seeking to establish independent credit rating agencies. For Africa, the launch of AfCRA will be a crucial step toward achieving greater financial sovereignty, allowing the continent to define its own economic narrative and strengthen its position on the global stage.
Follow @Spotlight in Africa for expert-driven insights on Africa's economic transformation.